Boxer has officially listed on the Johannesburg Stock Exchange. This completes Pick n Pay's two-step recapitalization plan and marks the first listing of a discount retailer in South Africa. Pick n Pay brought Boxer in 2002 with 35 locations and an annual revenue of 800 million rand. Today, the discount retailer has 500 nationwide stores and generates 40 billion rand in annual revenue. About 68% of the retail market for inexpensive groceries is held by Boxer. The listing comes a week after South Africa tightened rules for spaza shops as a safety and compliance measure. That has, however, also raised questions about the future retail ownership of the township economy. In other business news, now Spar has reported higher full-year earnings with a 4% increase in group turnover from operations in the year ending in September. This follows decreased turnover growth recorded in every region. That was for the second half of the fiscal year, while turnover in Ireland and Southwest England as represented by the BWG Group, rose by 6.7%. Spar Southern Africa, which includes Spar Tops, Build It, and Pharma, recorded a 3.7% gain. Spar is also intending to introduce a premium private label product line in an effort to attract local higher income shoppers. At the same time, it further hopes to increase its market share in the cheap retailer market. CEO Angelo Swart speaks to us now. Thank you so much for your time and patience. Angelo, first talk us through the driving factors behind this performance.
Yeah, thank you for having me. It's been a tough year across all the economies we operate in. I think quite disappointed at our top line growth at 4% across the group, particularly in the performance in Switzerland and the southwest of England, where our turnover growth was below last year. Relatively strong performances from our Irish colleagues as well as the Southern African business, although we'd like to have done better. But I think solid performance at the bottom line, with operating profit growing 15% and profit before tax growing at 20%. I think some really good progress against our strategic priorities for the year is something we're really proud of. So altogether, I think a result we can be proud of, although probably not as good as we'd like it to be.
Now, plans going forward, particularly in the near term as we face the festive season and a brand new year being 2025, with better optimism, easing inflation, as well as a drop in interest rates. What's your strategy there?
I think we just all really quite proud of where South Africa is at the moment. We're happy about the macro outlook for the country, and really relieved at how stable and how well the country has managed the change that we saw earlier in the year. Very excited about what the year ahead has to offer. Our focus for the year ahead is to really deliver, as you mentioned, on delivering a new format for the top end of the segment, as well as revitalizing our Save More business, which is focused on township economies and rural areas. And then really to continue adding value to our consumers' lives by giving them the right balance between value and price, quality and price.
Let's talk more on those plans, particularly with regards to an increase in market share in the lower end of the retail space. Of course, competition is getting tougher. Boxer listing earlier today. How do you plan to get into this market?
I think something that has been underreported is the strength of Spar in the township economy and rural economies. It is a segment of the economy that we're really well represented in, and that we trade really well in. And with the majority of our stores being run by independent retailers, I think it's a strategic strength for us, with many of our retailers living in the communities they serve, knowing that the customers who frequent their stores every day and really connecting with them at a personal level. And we feel that particularly in the township and rural communities, I think we do really well there. And it's an area of our business that has grown significantly in the last year, probably an area of strength for us, grown ahead of where the rest of the business is. And it's an area of the business that we remain excited about and really proud of what we do in those communities.
Lastly, what's to be said about catering for higher-end consumers? What are the expected gains in this area, and is it still aligned with the Spar brand?
I think traditionally with our convenience positioning from decades ago, we've done well in those communities. I think there's a segment of the market that is looking for a more artisanal offering, and it's something that we can do well. Again, driven by our independent retailers who run the stores that they own and are in those stores. And I think that gives us a bit of strength to lean on when we do try to deliver on something a bit more artisanal and niche for a relatively small segment of the South African market.
Thank you so much for your time and contribution. Angelo Swartz is the CEO at Spar, talking us through the latest results from the retailer.